Welcome to Spring into ETF Investing, a special edition of ETF Market Insights. On today's special episode, we will be discussing 2025 ETF trends, investing in a changing world.
Welcome to the channel and our Spring into ETF series. For those who are new to the channel, our goal here is to provide timely market-related insights and ETF-focused education to Canadian do-it-yourself investors with the goal to become your trusted partner in investing. We want to bring you access to the same level of high-quality resources that advisors and institutions receive in our industry. Before we begin, a quick reminder, we are not providing investment advice or recommendations. Today is all about education and information. Today, I'll be passing off my hosting duties to Zayla Saunders, my colleague and senior associate at BMO ETFs. Zayla will be joined by Jessica Morehouse, Nate Kennedy, and Max Nicholson. They'll be discussing key ETF trends for 2025, common mistakes new investors make, and how investors are reacting to current market conditions. Take it away, Zayla.
Welcome to today's episode on 2025 ETF trends. I have the pleasure of being your host, and we have an incredible lineup of guests joining me today. We're going to break down what's what, what's not, and what you need to know about ETFs this year. Let's meet our guests. Nate.
My name's Nathan Kennedy. I'm a financial content creator, and I do content all around, career stuff, investing, budgeting, all that kind of jazz. Been doing it for a while, and super excited to be here.
Thanks for joining us. Jessica.
Hello, I'm Jessica Morehouse. I'm the author of Everything But Money and the host of the More Money podcast. And I've been a financial educator and content creator for over 12 years.
Amazing. And Max.
Awesome. I'm Max. I'm the founder of Blossom, which is a social app for retail investors with 250,000 members sharing their portfolios, trades, and lots of insights about investing. And I also write our weekly newsletter, The Weekly Buzz, where I break down the top stock market news of the week.
Amazing segue, Max. So you mentioned over 250,000 users on Blossom. So you have a lot of data. What are you seeing for trends in the ETF space? And are investors buying securities, or what are we looking at?
Yeah, so I think one of the biggest misconceptions people have about retail investors like us is they think of Reddit, they think of GameStop, they think we're just investing all our money into super risky positions. And that's not the case. So if you look at the data, we have over 2 billion in linked assets now on the platform from Canadian investors. So really interesting data set of the market. About 47% of retail investors' holdings are in ETFs and 39% is in stocks. The rest is in cash. So retail investors are holding even more ETFs than stocks. And among those ETFs, the biggest holdings, about 60%, are in index ETFs and dividend and covered call ETFs. So another common misconception is that dividends are for old people, but
income seekers, earners,
exactly.
Yeah.
But retail investors, our audience is 25 to 45, really like the dividends as well. So those are some of the trends we're seeing in the data. But yeah, excited to hear what you guys are seeing with the content and on the road.
Yeah, and Jessica was just on tour for her book tour, so you're probably hearing from a lot of investors. Are they getting caught up in the hype, or what are you hearing from your audience?
Honestly, I'm getting a lot of questions about what's going on between us and the US. A lot of people really concerned about their portfolios and what they should do. And honestly, there's a whole chapter in my book about human behavior and please don't panic. So I kind of just refer people back to that chapter about what we learned in 2020 and all the other times when there's some sort of economic crisis. And the best thing you can do is sometimes absolutely nothing, or do the opposite to what your instincts are telling you to do, which is sell in a panic. Just keep invested and keep calm. That's literally what I'm doing every single day. So try to tell people, just stay calm.
Keep calm and carry on.
Exactly.
The old saying. And Nate, you communicate with a lot of do-it-yourself and new investors, people transitioning in their careers. So what are you hearing from your audience, and are they attaching themselves to new trends, or what are you hearing?
Yeah, I think it really depends. I do think there's a lot of swaying that happens, but a huge mistake I see early on is chasing performance. And it's a classic one, but in terms of just what I see in the content, the easy thing, even when I think back when I started investing in ETFs, like you go on ETF.com and you filter for performance and you just see the top performers of last year and you're like, well, I guess that's the one, when really it certainly could be a loser the next year. So in general, I think keeping your strategy somewhat, long-term, having a longer historical background makes a lot of sense. And I tried to just sort of preach that message.
Okay, so you're not buying the best performing ETF that you can
Not
find.
anymore,
Okay,
no,
okay.
no.
This is a great segue again. So underhype versus overhype. Jessica, what is the most overhyped trend you're hearing and seeing right now in the industry?
That's a great question. Is it bad that I don't really keep up with trends?
No.
I feel like because I've seen so many waves, like starting investing in my 20s and now I'm approaching 40, I've seen all of the mistakes that young people, and I made lots of those mistakes. And so personally, I try to exit out, and then I hear from trends from people being like, hey, should I do this? I'm like, I don't know what that is. But from my, education and my background in finance now, no, probably not. Stick to whatever that investment plan is. What's your risk profile? All these other elements that are kind of tried and true. Just trying to be that kind of anchor for people. So I have no idea what's going on. What's cool,
nice.
what's not cool, because I'm never cool. I'm just doing the most boring stuff ever, and that's worked really well for me.
It works. Max, what about on your side? What are you seeing? Hyped, overhyped, underhyped? What are you seeing?
That's so true. Well, building off what Nate said, like I think since we had such a wild bull market over the last 2 years, it's driven a lot of investors to over-index in the high performers, because it seems like, well, these things can never go down. And recently with the correction where the S&P fell about 10%, that was actually, I think, a really good thing, because it helped train especially new investors that, hey, this isn't just going to go up and up. And one of the things especially is US tech. So I see I think US tech has been maybe not overhyped, but certainly people are over-indexing on US tech. I think one of the most underrated is international exposure. And so we're seeing luckily retail investors are being smart about this. The biggest increase this quarter was in asset allocation ETFs like ZEQT, which have some of that international exposure. So even that adage of, just buy and hold the S&P 500, I mean, that's not as bad as just buying and holding one stock like Nvidia or Tesla. But even when you're just doing that, you're still making the choice to overexpose yourself to just US and especially US tech, because S&P is even more exposed to US tech than ever before. So that's kind of I wouldn't say overhyped, but maybe it is a little overhyped, is just over-indexing on just that.
I actually really like you said, I love that the S&P is going down, because it is training people who maybe learned on TikTok, hey, just buy the S&P 500. Guess what? This is why you need to diversify your portfolio, because it's not always going to be the best thing to hold in your portfolio alone. You need to have that international exposure.
Exactly. You're still making a choice, even though you're buying a pretty diversified index, you're still making a choice. I'm just investing in US, which is sure, if that's actually your well thought out research decision, that's fine. But if it's not, you should be knowing what you're buying, right? So
yeah, that whole TikTok investing philosophy. I mean, you would have a very large audience on TikTok.
I don't take it personally. Yeah.
No. So what would you say to all your friends on TikTok who are being sold this, one region, one country approach? What would you say to them?
Yeah, I just echo everything that was just said now. I think similar to what Jessica was saying, keep it super boring, globally diversified, I think is a good, a good mix. And that's something that I think it's easy. I mean, for the past 15 years, you could look and be like, well, I wasn't international and I did just fine. And I think people forget about the lost decade of the 2000s and how, internationals clearly outperformed. And so I think building a sustainable long-term portfolio is boring, but it's usually what ends up being the best for you in the long term. So I would just totally agree with everything they just said.
Yeah, I mean, a lot of people are thinking about focusing maybe in one region or sector, but what would be an ETF, one starter ETF that somebody who has a long time horizon could use that is well diversified?
Yeah, certainly. I think there's nothing wrong with ZSP. I'm a huge fan of it, but I think something like ZEQT is a great example of having, it has US in it, but it also has international and is more globally diversified. And that's something that you could probably get great global exposure just with that. And if you wanted to add other ETFs, you certainly could, depending on your strategy. But I'm a big fan of asset allocation ETFs because it really does follow those sort of good principles.
Yeah, it's kind of funny when you get started investing, you want to buy stocks and be super technical. And then the more you learn, you're like, okay, whoa, back to basics, asset allocation.
It's soap, right?
The more you touch it, the less you have.
Exactly.
Yeah, amazing thing. So Max, let's go back to you. We're talking about Blossom, social investing. How is it revolutionizing the way people are choosing investing or talking about ETFs with one another?
Yeah, 100%. Well, I think the most interesting thing is if you think before Blossom, how you would discover ETFs. You might Google best ETFs to buy. You might look on YouTube, but you're only getting a couple opinions really. The coolest thing, in my opinion, about Blossom is you can see the data and I've talked a lot about the data already, but you can see like which are the most popular ETFs among Canadians, look through those, see the trends sort of for yourself. So for instance, we're talking about ZSP, the S&P 500 ETF. I can tell you that's the 14th most held position on Blossom, which is like a pretty good representation of what retail investors are holding. You can discover, other ETFs that you may have never heard about, right? Versus if you're kind of just looking on top 10 lists, you don't get the full like list, and then you can see other people join in different discussions. So it's pretty cool. Like even for myself, my own investing, like ZRE, right, with real estate ETF, which we were talking about before the cameras were rolling. Like that one I discovered through the community of, different real estate ETFs that you could get exposure to. So it's changed the way I invest, certainly.
Yeah, I think that's a really beautiful thing about Blossom. You guys have built this community, and it's not only for young people, but predominantly younger people starting to learn about investing. Traditionally it's our parents or people at institutions that teach us, but you've created this really neat community where you can go and share your ideas and learn from your friends. So thank you for that. It's really cool. Jessica, FOMO, you've had a longer investment experience than maybe some of the newer investors starting out. So how do you avoid FOMO, and what are some tips you can give people to stay away from that?
I mean, I think the best way to avoid FOMO is probably to learn from your mistakes. That's how I've definitely been like, oh yeah, you know what, investing in that particular security or asset burned me. And I did it because I didn't do my research and it was popular and I felt like everyone was doing it. So let's get in it. And then I lost some money and that didn't feel good. Don't want to do that again. So that's usually what I tell people. It's like, it's okay to make mistakes, but please learn from them and don't repeat them. And this is very easy to do, kind of, I feel like, for especially beginner investors. If you've experienced like what we experienced in 2020, it's 5 years later, I see a lot of people making the exact same mistakes. So I'm like reminding people, remember what happened back then? Remember what you did and you didn't like the repercussions? Let's try to think differently this time, even though it feels like this time is different. It's not really that different. It's just different environment, but kind of same, but different a little bit. And so that's really, what I'm kind of focused on educating people about is it's okay to, try something out, but, it's, if you want to actually build wealth for long term, it's not about just seeking out what are other people doing, what's the most popular thing, what's cool right now. It's really looking internally about, well, what are my goals? What do I want to achieve? And what are the vehicles that can help me get there?
You've talked about this in the past with us, but you have this big investment mistake you first made. Was it over diversification? Can you speak to that? I can't remember, you shared that story with us.
It was honestly like what we talked about in the first question. Like I was the ETF.com guy, triple levered, like whatever sort of thing. And I realized pretty quickly that it's just not a great investment strategy. And so I had maybe 10 to 15 different ETFs, all kinds of different strategies from all different sectors. And I just realized one day, like, what am I doing? The more you learn, you're kind of just like, this is a little bit silly. But you think back then, it's a nominal amount of money, and I'm glad I got in the markets earlier, and I kind of learned sooner to make that. So I've rectified that, and I try to share that as much as I can.
Early life lessons. You want to add? Go ahead.
I think that's such a good point, though, that we think of ETFs as low risk, well diversified, but there's many different flavors of ETFs, right?
There's so many
you can have very risky ETFs that have like double leverage, super high risk. So obviously more index ETFs, asset allocation ETFs are generally like well diversified and like lower risk, but just because it's an ETF doesn't mean it's
and
low
that's
risk.
Why I try to always like not just generally say just buy index funds ETFs, because there's like which one? I might as well just say buy stocks.
Or just buy ETFs.
Like,
you're like, well, what kind of ETF? There's like a Bitcoin ETF. That's not maybe the one you're talking about. You're talking about maybe an index ETF or something more diversified. But that's the thing that drives me crazy online when I see people like, just buy ETFs. You're like, well, what kind?
Which one?
Like, what kind?
Just invest. Like, what does that mean?
We want to invest. How? I don't know. The excitement's amazing. But a little more guidance, which is why you guys are here.
Totally.
Nate, something you talk about a lot in your content is that transition of income and how that's a really important factor of saving for your long-term retirement. Can you speak to how you coach people or share your knowledge around income and investing?
Yeah, it's really on the theme of what we're talking about. I think this focus on performance doesn't really make sense, especially early on in your career. And for the majority of us, we work a job, we earn income. And for the first, 10 to 20 years of your career, like that is where the growth actually comes from. If you have $5,000 and you get, you double your money, it's 10K. But if I get a 15K raise, well, I'm 5K up on you, right? and you can't double your money reliably. So it's one of those things where early on, it will take you literally decades to get to a point where your compounding is out earning yourself. And so I think focusing on maximizing your income is the best case for your wealth, and just picking a good, solid, long-term, historical rate of return, and just focus on pounding the income in there is what I typically say.
Okay, we'll get back to this, but just to summarize all the amazing things you guys chatted about, income, super important, be your own advocate, more income, more savings, compound growth, and then a well-diversified approach, don't hop on the trends. And when you're thinking about ETFs, do a little bit of research, find out which ETF you want to buy, and if the diversification side is important to you, then look at that too. So we're going to do a rapid fire round. I'm just going to ask you guys your biggest investment pet peeve. So Max, tell us your biggest investment pet peeve.
Get rich quick content.
Yeah.
Fair. Jessica.
I mean, I feel like I've already mentioned a few of them, but I would say my biggest pet peeve has been the people who are saying just buy one ETF and you're good. You need more than that. You need to have more exposure, different asset classes, different types of regions, different markets. Yeah, we need more than just one, unless it's an asset allocation ETF. That's a bit of a different beast there. Yeah.
I would honestly say just like genuine, which might sound counterintuitive, but just seeing advice online. Which was well, you're on content, you're doing content,
TikTok
whatever. But when people tell you that you should do something and they have no idea about your situation, I try to be really careful about that and say generally these things are generally good and speak in generalities because first of all, legally, I don't want to be telling people what to do. Two, it's not accurate for them. I don't know them. They could be 25, they could be 65. I have no idea. So I have to generally talk about these sort of things for these different things. And when I see people kind of just say, you should do this or you have to do this, it drives me crazy. So
directions aren't really fit for investing. It's more of an art, not a science, I guess.
Yeah, absolutely.
So Max, we'll start with you. One ETF, if you could hold it for the next 10 years, what would it be and why?
Yeah, well, you can see my whole portfolio on Blossom. So my top ETF right now, ironically, based on our discussion, is ZSP, the S&P 500 ETF. But I have been, that only 30% of my portfolio, I believe. So I am diversified across that.
Okay, U.S. equity all day. Okay. Jessica.
Honestly, when I talk to people, they're like, what's the simplest way to invest? I would go with a ZEQT or a ZGRO just to get some bonds if you have a little bit of a lower risk profile.
Amazing.
Yeah, ZSP. It's not everything, but it's a healthy portion, and I absolutely believe in everything we just said. But my biggest holding is definitely the ZSP. Yeah.
And some asset allocation
and
stuff.
Of course. Yeah, international.
You guys have been so amazing. Thank you so much. So, can you let the audience know where to find you on socials and how to connect with you? So, Max, where can we find you?
Yeah, download Blossom Social on the App Store. You can find me, Max Stocks is my username on there.
I think it's not, you got a little,
there you go. On my sleeve is my uniform.
Self-promo, I love it, amazing. Yeah. Jessica.
You can find me on Instagram at Jessica I. Morehouse, and you can grab a copy of Everything But Money anywhere, any bookstore.
Amazing.
Yeah, I'm New Money Nate everywhere. I'm Nate New Money on Instagram, and reach out. I try to get back to everybody. So
that's amazing. Thank you guys so much for joining me today.
Thanks.
Thanks for having us.
To everybody watching, if you found this helpful, please drop a like and let us know in the comments what's your favorite ETF for 2025. Thank you so much, and we'll see you next time. Bye for now.